Hi, everybody. Thank you so much for joining us with our live webinar, Estimating the Financial Impact of COVID-19 on Your Brokerage. I can see right now that we've got about 30 attendees, and so we're just going to give people a few more minutes to figure out their tech and to join, and then we will get going. So thank you so much for your patience. All right, I think we've got quite a few people on now. I think we'll get going. So thank you so much for your patience and for joining us today. Today is really about, sort of understanding or trying to get some understanding about what this crazy world is going to do to our brokerages financially, and how what we can do to safeguard our balance sheet, how to look at things, a bit of familiarity with government programs that are available. Today we've got a couple of really awesome speakers. We've got Pete Barron, who is a business mechanic at Blue Neck Business Mechanics. He works with Krebs and quite a few brokerages on leadership. Hey Pete, I got you up on the screen now. And so he's an excellent resource for real estate brokerages to understand the financial impacts, or really just to get a grasp on their financials, frankly. Pete, what am I missing there?
Well, I think that's a great introduction. So also, I'd like to introduce Clayton, who's on the call here hosting this thing. Thanks very much for donating your technology for today. Clayton's a great tax guy. He's a fantastic chartered accountant here in Calgary. Lots of small and medium-sized enterprise clients that are very much like yours. And he's on the call because he's been following all of the federal subsidies and programs and the impacts to implementation and what that'll mean to the cash flow. And so I think it's very important to get that kind of expertise out in front of you so that you know how to best position your business and your brokerage for the next few months to come out of this as unscarred and unscathed as possible. So thanks, Clayton, for being part of this webinar today as well.
Well, thank you.
So let's get started. First of all, I'm going to show you the standard disclaimer, which essentially says that we don't stand behind anything we say. But at the end of the day, there's some really good, useful information here. And if you're interested in anything specific, this webinar will be recorded and will be made available. And if you're interested in slide sets, you can get copies of those as well. But more importantly, if you need the expertise to follow up on these things, just give Clayton or I a call or drop us a line at the end of this, and we'll help you to either clarify things that are important to you specifically, or to steer you to the right people who can get you the information that you need to get through these challenging times. So this will be in the slide set, but this is some of the blog information, both from Aiken Henderson and from Blue Neck, that you can go to on COVID-19 and some of the impacts. And today, I think we're going to cover up some really critical topics for everybody who's running a brokerage or even running a business. First of all, understanding the numbers in your income statement and balance sheet. I don't know how many times that I deal with brokerages, small businesses, where I presume people understand how to read an income statement and balance sheet, and they don't. So I'm going to give you a little bit of that, as well as very specifically what to look for in your own income statements and balance sheets to figure out what you need to do to get through these next couple of months. This is critical to understand. If you don't understand income statements and balance sheets, by the end of this webinar, you're going to be a whole lot smarter. Second of all, actions that you need to take to survive the COVID-19 impacts. I was listening to the Prime Minister's address this morning. He was very clear that we will not be returning to life as normal for a long time. Even though we may come out of this lockdown type of situation, it's going to be different. And what do you have to do? Third of all, understanding the federal subsidies. That's why I'm delighted that Clayton's on the call for today, because he's got a really great grasp of all the details. As confusing as they've been over the last couple of weeks, Clayton is going to make them simple. And third of all is looking out for the remainder of the business year. And how long is this going to last, and what's it going to look like when we come out of it? We'll get into that as well. So, keys to your financial facts, your balance sheet and your income statement. When I do this in person, and unfortunately we can't do this in person today, I ask the question, how many times have you looked at your income statement and balance sheet in the last year? And half the room, the last time they did it was they sat down with their accountant and filed their taxes. This is not the time to ignore your balance sheet or your income statement. Your balance sheet, very critical piece of information about a snapshot of your business statement. It's the story of what you own and what you owe and what's left over. This is going to tell you how well positioned you are at this point in time to get through COVID-19. So, what's on your balance sheet? Going to give you a quick tour. I'm not an accountant and I'm not going to dwell on this, but you got to know some basics. At the top of every balance sheet are your assets. Now, the assets are the things you own or that you have access to, that you have ownership over. They're divided into long-term and short and current. Current is short-term. Current is stuff you can get your hands on in a pretty short amount of time. Cash in your bank account, for example. Your accounts receivable, most of them are going to come in the next 30 to 60 days. Those are your short-term assets. Long-term assets are the things you've invested in, like your office equipment, your vehicles, that kind of stuff. Together, that adds up your total assets, or what you own. The middle section is called liabilities, which is what you owe. This is a very critical piece of your business to understand at any point in time. Your current liabilities are your accounts payable and any current portions of loans that you've taken out, and taxes payable, any kind of payroll payable, that kind of stuff all sits down in your current liabilities. It means stuff you got to write checks for in the short term. Long-term liabilities are things like long-term bank loans you don't have to worry about in the short term, but they're sitting there over, and you have to pay them back over some period of time. Together, those are your liabilities, okay? What's left over is called your shareholder equity. And you think that that's, something that changes from time to time, but it only changes as a result of what happens in the changes between your assets and your liabilities. Okay, enough for teaching. What is this going to mean? First of all, Am I able to pay my bills? This is where you look on your balance sheet. Your current assets minus your current liabilities tells you if you're in a good enough position to be able to start to pay your bills. In this case, I got $122,000 in cash and accounts receivable coming in. And in the short term, I got to write $64,000 of checks. I'm happy, I'm in good shape. As this number starts to get closer and closer or flips the other way, this is when your brokerage is going to get in serious problems. Okay, this is where you have to start getting some serious help to get yourself out of this problem, because once these numbers flip and the numbers on the top are smaller or really tight to the ones that are on the middle there, this is where you're going to get yourself in problems and having trouble to write checks and pay your bills. As you go through COVID-19, this balance sheet story is going to change very rapidly. It's important to run this on a regular basis, keep it up to date, and to look at what's happening. Second thing is to think about is your immediate COVID-19 considerations. So, is my business worth more dead or alive? In most cases, your business is going to be worth more if it's a live going concern. Even if it's struggling, it typically is worth more as a going concern than it is as a salvage operation. So for example, if you shut your doors, what's your business worth? If you kept your business open, what's your business worth? This is an important consideration, because if you're going through this stuff and you're thinking about at some point, you know what, I should just throw in the towel and shut my doors and say to hell with it, you know, think again, because this is a very important decision for you to make as you're going through here. And most of the time, what I see is that most people are better off by finding a good way to keep the business doors open and keeping operating, especially when you start to hear some of the important things that have come out of the federal government in the last little while that will help you to keep your doors open. This is often going to be your best alternative, no matter how depressing it gets on from time to time, and how difficult it's going to be as an owner of a brokerage to go forward. So what do I need to do for that? First of all, from the balance sheet perspective, keep that ratio of those current assets as healthy as possible compared to your current liabilities. There are a number of things we'll talk about how to do. Then when we talk about your income statement, we're going to talk about what you need to do to focus on the bottom line to keep creating value in your business and keep it valuable and worthwhile, keep the doors open. And there are things you can do there too, some pretty dramatic things that you can do that you may not have thought about. We will get into that. And I'll give you those hints. So if you were a non-going concern, in other words, if you're a business that shut your doors today and the receivers came in and picked it apart, what's roughly a quick way of looking at what your business is worth? Now, I've worked with a whole bunch of business brokers in the past, and there's a whole bunch of valuation methods and different ways to go through this, and there are different things that people consider. But the rough and tumble one is take a look at your shareholders' equity, and at the bottom line, that's what's left over after everything's paid off. Okay. The second way of doing the evaluating your business is to look at an income multiple. In other words, whatever your bottom line is before depreciation and taxes, before those things, you multiply it by a number to get roughly what it would be worth on the open market if you were to sell it. Now, I know that there are other rules of thumb that are working out in the brokerages today. So there are multiples of different numbers that you will look at from your book of business and the kind of agency activity that is going on that has typically been a good indicator of what a brokerage might be worth as a going concern. And I'm not saying that those are wrong. Those are really good ones, only because most of you out there believe that they are right. What I can tell you is that underneath of that, there are standard valuation methods, approximately 5 or 6 of them out there that are used in different industries at different times to create values based on multiples. So one of the standard ones to look at, in addition to your brokerage multiples that you will look at, is an income multiple. If your brokerage is doing under $1 million of revenue, which is a very small brokerage, you're looking at taking your income and multiplying it by 1 or 2. If your brokerage is doing over $1 million of revenue, you multiply that between 2 and 4. And the reason being is that larger brokerages are typically less risky and more stable when you're doing over $1 million of revenue than when you're doing under. So your multiple shifts pretty dramatically. And the difference between 1 and 2 or 2 and 4 is based on a number of other operating concerns that say, how well is your organization set up to continue to run successfully? Those are things that I often get involved with, but it gives you an idea of how much that swing can be. So what's your business worth? It depends if you want to keep the doors open or if you want to shut them. So what can I do for COVID-19 right now to improve my balance sheet? First of all, try to increase your cash holdings. Invoicing faster. I have seen so many small businesses where they ship out invoices at the end of the month, or worse yet, the middle of the next month. That means that you have got money owing to you for up to 6 weeks before you've even cut an invoice that says your due payment in another 4 weeks. In a crisis like COVID-19, this is completely unacceptable. So if you want to really start to tighten up your cash management, the first thing to do is start looking at how fast you're getting those invoices out. Now, some of you are going to be breathing a sigh of relief out there and going, I get my invoices out next day, and that's fantastic. That is best practice. For other of you, take a look at how long it takes to actually generate the invoice once it's owed to you. The second thing is take a look at getting, if you've got any ability to get deposits or progress payments, do it. Now, it's often with standard real estate transactions, this is a really difficult thing to do. It would mean changing your business model. In some cases, it might make sense to start looking at how to change your business model or get progress payments rather than having to deal with drop-offs at the end of a lot of work that you might need to do. This is a very, very important thing long-term to think about. And in the brokerage industry, this is very difficult to do, and because of all the rules, restrictions, and common ways of doing business. So I caution you about looking at number 2 as your savior, but know that there are opportunities to change business models in the long term that other industries have embraced and been very successful with. Third thing is converting your accounts receivable to cash faster. If you are collecting 6-8 weeks out, start looking at paying attention to collecting much faster. Most of my small business clients have looked at this stuff and they've moved tens, if not hundreds of thousands of dollars out of the pockets of people that owe them money and into their bank account. This is an important activity to focus on. So invoicing faster and getting your cash in your bank account faster are the 2 biggest things you can do to increase your cash holdings. The other thing is continuing to work and bill. There are lots of people who have figured out that houses still need to be bought and sold, and somebody's going to be doing it. So the more assertive and aggressive you can do to continue to work and get some money in the door, the better off you're going to be. Now, the 5th one is one Clayton's going to talk about later. There is free money from the government, significant amounts of it. This is an important thing to do because it's not only going to improve your income statement, it's going to improve your current assets on your balance sheet and improve your balance sheet. So when we get to that section, pay specific attention to that. Defer payments if you can. There are a whole bunch of government payments that you can now legally defer because the government's going to not request payment for these things. Clayton will go through them. The other thing is taking a look at all of your loans and leases and property stuff and going at it and seeing if you can get payment deferrals and loan deferrals on those things. I have had seen a lot of my clients get a lot of success by going to people where they're leasing equipment. Maybe for you it's office equipment, and say, hey, can you give me a vacation for 3 months on my equipment leases? And they're getting it. Going to your landlord and saying, hey, can I get a 90 days worth of no rent? I'll pay the op cost, but give me a break on the rent. I am telling you that 7 times out of 10, I have seen this request go positive. This is a massive improvement to the bottom line and to not only to the income statement, but also keeping your cash in your bank. These are ideas that I think are really critical to start doing. If you haven't done them, or if you feel uncomfortable doing that, don't, knowing that other people are making these requests and are getting good results. Third, reduce your payables. This impacts your current liabilities, but also on your P&L. Renegotiate your loans. The Bank of Canada rate has dropped to damn near free money. If you have got loans that are locked in at 2.5, 3.5 or worse, you can often go and renegotiate, replace and repay those loans at a fraction of the interest cost that you're currently paying. Take a look at all the money you're borrowing, including your lines of credit, and making sure that your lending institution is dropping your lines of credits to match the Prime Plus agreements. Negotiate quick payment discounts with some of your suppliers. Sometimes the suppliers are going to be worried enough about getting paid from everybody out there that if you ask to say, look, I'll pay you today if you'll give me 10% off my bill, I've seen my clients get really good results from that because people are nervous about getting paid and they're getting discounts on it. If you're in a position to do that, ask for it. It can work. And the other one is negotiate with your vendors to spread out payments. If you've got payments that are large and due, phone them up and say, hey, for the next couple of months, I'd like to spread out my payments and do it over a longer period of time, or put some of the payments spread out into the fall. Can you help me out on that? All of these things are critical actions to consider to try and improve your bank account, reduce the amount of money you owe in the short term, and survive COVID-19. Now, your income statement. This is probably the one that most of you have looked at if you haven't looked, if you're looking at your financial statements at all. So, the financial statements of a profit and loss or an income statement answer some basic questions. Am I making money? Where is it going? And can I pay myself? And when you're going through COVID-19, being able to still pay yourself is important, but how much can you? So let's start looking at some of these things. The top of it is your revenue line. So under your revenue heading, you're going to have different things that are going to make money for you. The second thing, and not all of you will have this on your income statement, but I highly encourage you to start thinking about structuring your chart of accounts to include it. And this is called your cost of sales or cost of goods sold. What these are a very special kind of expense. They're expenses that go up and down with your business. They naturally go up and down because they're tied into your revenue. So if your revenue is going up, the cost of some of your agents, for example, or some of your internal costs, or your third-party costs, that are on a per transaction, per listing kind of basis will go up and will go down with your revenue. Understanding that this part of their expenses are highly variable is important to understanding what's going to happen over the next 90 days. If you don't have that on your profit and loss, get a hold of your accountant, guys like Clayton, and figure out how to start pulling that out, because this is important to know which of those expenses are naturally going to go down anyways. If you already understand that, you are probably ahead of many people on this call, and you should pat yourself on the back. For those of you who don't, you now know what you need to do. The difference between all of your sources of your revenue and your direct cost of sales is called your gross margin. Now, your gross margin says, of all the business activity I'm doing, is it still contributing some money to my business? That's what it's saying. Your gross margin, as long as it is a positive number, it means you're still making some money by keeping going. Below that, though, are your fixed expenses. These are things that you pay month to month no matter what. These are the ones that are things like your accounting fees, your bookkeeping fees, your automobile leases, your CREB dues, meals and entertainment that, you know, for marketing purposes are often that, salaries for yourself that you pay every month, hopefully. Technology costs, your phone costs typically don't go up and down that much with the business, so you put them down in the expense line. Now they might vary a bit, but they're not going to be varying all that much compared to the stuff in cost of sales. So that's why you put them down in expenses. After you take off those overhead expenses, then you get your net income from operations. These are the key pieces of your income statement that you need to understand. So, income from all sources in this case is 209. My direct costs, 101, leaving 107. I got some overheads of 77,000 bucks, which means on $209,000 of revenue, you know, I've got $26,000 left over, which is a little over 10%. It's not too bad for their average business. How much can I pay myself? Now, because we're in a situation with COVID-19, it's not business as usual. So trying to understand what you can actually pay yourself is going to be more of a thought exercise. A lot of business owners I deal with look in their business bank account, and if there's money in their bank account, they say, well, I can pay myself. What's wrong with that situation? Well, it doesn't account for all of your current liabilities. The checks you still have to cut to everybody else. So it might be smarter to take a look at your current assets in banks and accounts receivable, subtract your current liabilities, and then take a look at what's left over in that equation. That'll give you a more realistic viewpoint of how much money you really have left over to pay yourself. But that still might not be accurate. I can look and retained earnings. A lot of business owners say, well, retained earnings is what I retain for earnings, so I can take it out. I can tell you that that's an incorrect assumption, so don't even think that. The third one is net income from operations. They look at their income statement and they say, hey, I made $10,000 last month, I can pay myself $10,000. Again, that might not be an accurate statement because you have other things you have to pay. It doesn't take in consideration how much money you have in your bank and how much accounts receivable is coming in. It doesn't account for how many checks you still have to cut to people. So current assets minus current liabilities might still be a better way to figure out what's really left over for you to pay yourself. At the bottom here, especially during COVID-19, it's good to get a second opinion of what's really left over that you can take for yourself and pay yourself. So talking to your accountant is probably still a good idea. It is not business as usual out there, and we got to recognize that. What can we do to improve our profit and loss? What can we do to improve our operation part of our business here? We need to protect our bottom line here. All of you need to do things that will protect creating not just revenue, but a bottom line, because creating a positive bottom line or minimizing the losses on that bottom line are going to continue to create value in your business. So first thing is, if you can do business differently as a broker, as an agent, if you can figure out how to do, if you haven't done remote contract signings, if you haven't figured out how to do e-signatures, this is the time to do it. If you haven't figured out how to support your agents in doing remote listing presentations, this is the time to do it. If you have not used Zoom in your own business to get in touch with agents, or for agents to get in contact with their prospective clients or their actual clients, this is the time to start thinking about how to help doing things remotely. The more you can make this normal, the more your business is going to be able to continue. Now, Krebs put out all sorts of guidelines, and I suspect that they will do more. For example, open houses are now prohibited. So how do you show houses when you can't do an open house? Well, there are lots of different technologies and ways to do that. I know of one realtor that just gets their client to FaceTime and walk around the house, showing the house. It's creative. It's simple. Figure out different ways to do the business that you normally wouldn't have, and you will create more business and revenue opportunities. Second of all, a lot of people are going to be, and I know the brokerages, you're under pressure from your agents to cut fees. So I understand that this is an overwhelming pressure for most of you, because the agents are being pressured by their clients to cut fees and cut everything as well under these difficult economic times. If you're going to have to deal with the pressure of cutting fees, cutting prices, doing things where your revenue is going to be lessened, it's critically important to look at everything that you pay and to negotiate those costs as well. Try to pass along as much of that loss of revenue, of a margin, along to your suppliers that you can possibly do. They are waiting for it and they're seeing it coming. You got to get to them. Third of all, never sell at zero margin and know what it costs you to do things. It never makes sense. I'm not going to say never, but most of the time, it does not make sense to do business at zero margin. You still have fixed overheads, fixed costs in your business. And if you're doing all your work and you're not contributing one nickel to that, you're wasting your time. Reduce all of your non-core expenses. At this point, I would be surprised if there's anybody on that call that hasn't gone through all of the stuff and said, how can I reduce this? If you haven't, pull up your profit and loss and go through it line by line. I have helped so many customers do this over the last 2 weeks, and we have found lots of creative ways to reduce non-core expenses. So, and the other one is even core expenses. There are ways to reduce them, to defer them, to find different ways. And as uncomfortable as this exercise is to you and your organization, this is a critical exercise for the next 90 days in COVID-19. Core expenses, payroll. There are massive government subsidies as of Tuesday of this week that Clayton will go through with you to help keep people on payroll. If you can't, there are alternatives that are including short-term layoffs and job sharing programs in the government. Core expenses like leases, loans, facilities, go at them and renegotiate them, even for the short term. Pay off high-cost leases and loans with low-cost stuff. The Bank of Canada is what, Clayton, I think it's at a quarter point now.
Sorry, I was on mute. Yeah, I mean, quarter point. I'm not sure. Have we heard if that started trickling through the banking system yet? Because last time we presented together, it hadn't. So.
Yeah, and we expect it to start trickling through the banking system, but we also have to make sure that the government's commitments to billions of dollars of liquidity investment is going to be there, because banks can't loan money when they're out of money to loan. So this is where the two things have to go together. So the Bank of Canada rates dropped. Money is flowing now from the federal government into the banking system, and we fully expect to start seeing that trickle down. If you haven't seen it immediately, don't be shocked, but keep your eyes open for those opportunities, because they are going to happen. So all of these things are critical. I'm sharing with you things that I share with all my clients to figure out how to batten down the hatches and weather through this storm. As a brokerage, there are slight variations on this to look at, and there are some things that are almost impossible to do, like taking deposits on the work that you do. But there are so many ideas there that I encourage you to look at to keep your doors open, but more importantly, preserve the health of your business so that you've got a healthy business coming out of COVID-19 and into what comes out after. Now, at this point, I'm going to turn it over to Clayton, and we're going to talk about all of the government income help that is available now, and that if you're not taking advantage of it, or you're having trouble figuring out how to take advantage of it, this is the section of the webinar that I think is going to be really, really important to you. Clayton's organized it around three basic topics: cash, capital, and payment deferrals. So Clayton, I'm going to turn it over to you. Do you need me to still keep moving the slides for you?
No, I'm just going to take 10 seconds and figure out how to share my screen here with you guys. So just hold tight, and then I will drive. That is no problem.
And I will let you know that at the end of this, we will take additional questions if they're out there.
Thank you so much. Okay. So I guess what a ride for the last couple of weeks. I've been sort of sitting in my dungeon here, growing a beard, which this is actually, I'm 3 weeks now, so that's pretty good. I've never been able to actually do that. And it's not much of a beard, but I wonder how many people are laughing at me out there. But I'm doing my best, okay? And what I'm also doing my best at is trying to keep up with all these government changes and announcements and everything. And I'm sure it's been very confusing to you guys. And, a couple recommendations I could make is glue yourself to my LinkedIn as stuff is happening. I'm posting on there, and we're also keeping some blogs of all the updates. So let's get into what exactly is available for help for private companies. And let me just get this off that screen. And here we go. So when we're talking about the government help that's available, I like to think of it in sort of three broad categories. What is cash help that's available now? And when I say cash help, my definition of that is, what are you not going to have to repay, or what will there not be a reckoning for one day, aside from maybe some taxable income, which we'll get into. The next is, what is the opened up access to capital? And then what can you defer? So there's three different categories: cash, capital, and deferrals. So we'll get into cash. The first one that was announced a couple weeks back now, and it's been passed into law, was the 10% wage subsidy. And so there's a big question when the 75% wage subsidy started being discussed as to whether or not this one would go away. It turns out that it is staying, and this sorry, my italics there needs to get deleted because that's old there. Sorry about that. So with the 10% wage subsidy, it is effectively there for people who don't qualify for the 75% wage subsidy, or employers that don't qualify for the 75% wage subsidy, because obviously if you qualify, that's the one you're using. And so companies like Aiken Henderson, for example, we've actually exploded in the last 3 weeks with advisory and cash flow forecasting and new work that's come in, just trying to help people through this. We wouldn't qualify for the 75% because we haven't seen a drop in revenues. And so this one we do qualify for. So what are the terms of that? Well, you can get up to $1,375 per employee, up to $25,000 per employer for wages paid March 15th to June 19th. This is mechanical. It's handled through reducing payroll withholdings that you would normally send into the government, specifically tax withholdings. You still got to pay the CPP and EI. If you're on an automated payroll service, the ones that we use, like the ones that we support our clients with, which are WagePoint, Payment Evolution, they've both got a toggle built in where they'll effectively just do the math for you and do it on the back end. This will be taxable income to the company, and it's only available for companies who are Canadian-controlled private companies, charities, NPOs, and you have to have taxable capital with less than $15 million to be eligible for it. So that's the 10%. The 75% is, again, it's a moving target. And so I want to defer to my blog. And so here's my blog, because I'm literally updating it every day as new announcements come out. The latest round of announcements were released yesterday. This link to the backgrounder is the latest from finance. And so this program is designed it's modeled after a few European countries, and it's designed to keep employers with their employees through the crisis, so that when it ends, we can come out of this together with employees with the same experience levels, and we're not having to do this massive reckoning at the end of the crisis, or at least at the end of the economic shutdown portion of the crisis. That's really what it's intended for. So it's been announced that it's available to corporations and partnerships. So I know a lot of you on this call today may be members of partnerships. And so if that partnership employs people like Aiken Henderson LLP does, those salaries would be eligible. It's not available for public bodies, but it is available to public companies. I'm sure you've heard a few announcements from the major airlines over the last few days. The subsidy is available from March 15th to June 6th, and employees that received the 10% wage subsidy in the interim are going to have that amount reduced from the 75%, whatever they got back. An employer cannot claim, well, there's some other details in here. Let's just get into this idea of hiring new staff. So one of the challenges here is a lot of companies aren't going to be able to ride out the next 6 weeks until this money starts flowing. And so that's going to put the companies who can at an advantage. And in fact, the announcement here is set up such that if I hire your staff because you couldn't afford to keep them on, I'm actually going to be able to take advantage of a wage subsidy for hiring them. So it's a really interesting piece of, or a really interesting announcement that they're going to allow it for new employees. I don't think it's a bad idea. There's interesting ramifications that come with that. Up until yesterday, we were going to have to compare last year's income to this year's income, March, April, and May. I listed a couple examples in this blog, which I've now deleted because I think it's been, for the most part, sorted out with the announcement, although there's a lot of other questions where companies wouldn't be able to take advantage of it that they should have. For example, last year, one of my clients moved his head office in March, and so there was no income in March. And so he has more income in March of 2020 than he did in 2019, but his doors are literally shuttered. And so, you know, that's an example of where it didn't work. Another example is where a company has expanded dramatically in the last 6 months. One of our clients had hired 8 staff in the last 6 months, and so their monthly revenues are exploding, and they just had to lay off 6 people, but their March revenues were still higher than that of last year. So that was a problem. So what the government's done is come along and said, okay, instead of using last year's March, April, or May period, you can use an average of January and February 2020 revenues as your comparative period for March, April, and May. So that tightens up the comparative periods quite a bit. So that's good. And the other thing that they did is said, hey, look, this crisis really only hit midway through March. The economic shutdown really only hit midway through March, so you only need to have a 15% drop in March. So that's also positive. But the whole fact that they're clinging to a drop in revenues test, I think, is flawed, and I'm not sure where the final legislation will land on that. I know that they're duking it out right now, getting the legislation together. So stay tuned for the actual legislation, and if you're glued to our blog here, you will see those updates as well. So what about the revenue numbers? This was another interesting announcement yesterday. It's got to be from business carried on in Canada, obviously. So it's from arm's length sources. So if you're getting a management fee from your parent co or your subsidiary, that management fee, it's not going to qualify. And it's calculated using, so on the one hand, they say it's calculated using normal accounting methods, but on the other hand, they've just recently announced that they're going to allow you to pick a cash or accrual method, but not a combination of both, right when you apply for the program. So you can it insinuates to me that you're going to be able to switch accounting methods to suit your purposes, but you have to stick with that method throughout the claim period, depending on whether you want to go cash or accrual. So that's a big hole right now that a lot of tax and accounting professionals are screaming about, because right on the ass end of that announcement from the finance minister yesterday, he took the latter half of his speech to look directly in the camera and make sure that all us private company owners knew that we were going to jail if we got it wrong or tried to game the system in any way. So I find it really interesting that we're mixing a completely subjective measurement approach with the threat of going to jail if there's gaming the system going on. I think that in order to threaten to send people to jail, you need to have really clear terms of what the proposal is, and right now we don't have that. There's a lot of questions, hoping that gets resolved by the time the legislation hits. So reference periods are in here, and the amount of the benefits. So there's two different scenarios here. One is, so they're asking you to attest that you're going to keep your employees at pre-crisis weekly remuneration levels. So effectively, if you have the ability to, you have to top up your employees by the extra 25% that they're not going to reimburse, the government is not going to reimburse. So if you have the ability to, from a working capital perspective, well, actually, I'm not sure from which perspective. That's a big question, is, well, what does that mean if I have the ability to, like, if so that's another question that's outstanding. But if you can top your employees up, they'll reimburse 75%. If you cannot top your employees up, there's special wording in there that effectively says, drop them to 75% pay, send them home, and we'll reimburse you for the whole thing. So it's kind of an A or B, right? That's what the formula is meant to do. Another announcement that came out yesterday is that they're going to cover 100%, or they're going to refund 100% of company portion of CPP and EI where the employees are actually not working in that week. So if they're actually sitting at home doing nothing and not working for you, you're going to get the CPP and EI back for them as well. And so what is covered here? Normal salaries and wages, bonuses. And it doesn't include things like severance, stock option benefits, personal use of vehicle, et cetera. It's got to be actual remuneration. And there's no upper limit on the amount of the subsidy that a single employee can claim. And that's why Air Canada is all over this thing. And good on them. They just rehired over 16,000 people. So that is, as the finance minister said, that is what the program is designed to do, rather than having all those people go on EI. How do I apply? Well, the application portal is set to be up in 3 weeks. I've heard that a few times from our leaders, and it's going to be accessed through My Business Account. If you do not have a My Business Account, log in right here. There's a link to do it right here. Payouts, they're saying, will begin in 6 weeks. That's another big point of contention right now. It's got to come a lot faster than that, because I think for a lot of private companies who are strapped for cash, the prospect of financing payroll with no revenue activities for the next 6 weeks is pretty daunting, and it's not going to be available to a lot of private companies until they get the reimbursement. So, okay, so that's that program. If you want to read more about it, hop on our blog. Okay, so we'll get this in full screen here. There we go. Okay, so other cash for business programs. Oh, by the way, any reimbursements on the 75% are going to be taxable income to the company. So whoever's receiving that reimbursement is going to be paying tax on that reimbursement. The work sharing program. So this is, I've got a great link to an article that explains this. I'm not an HR specialist by any stretch of the imagination, but what the work sharing program does is it allows you to drop your employees down to a partial week, for example, 2 days or 3 days, and have EI pick up the tab on the other couple of days and at EI rates. And so that's an interesting one, the Canada Work Sharing Program. Check that out if you think it might be a fit for you. The term has been doubled. It used to be only 36 weeks that it was available, and now it's been bumped to 76 weeks, along with a number of other things that have been changed. Alberta, the province of Alberta is, sorry, go ahead. So
I can add a little bit to that, because I have a few clients who have actually using this program in conjunction with. So there's a chunk of paperwork behind this one, so just be aware of it. And it takes 30 days for the government to approve it. So you're on your own for 30 days until from application, input until they approve it. But once they do, you have 2 months to start using it, and you have now 76 weeks to use it, and it's very flexible. So the advantage to this is, whereas the other programs are ending right now in 90 days, this is a program where you could flexibly reduce and increase the amount of employees you have in your brokerage, and have EI pick up for the differences almost on a week-to-week basis. So it gives you a lot of flexibility to keep people on staff, have them paid reasonably well, while giving them fewer hours when you don't have hours for them to work. So it's something well worth looking at as a longer term strategy.
Thanks, Pete. And on that, I've actually had a few people post on my LinkedIn. This is anecdotal, that the applications, the approvals for the work sharing program are going through a lot quicker than 30 days right now, because they're really pushing to get those through. So that's good news. Whether or not you're going to get that, I don't know. Alberta's refunding WCB payments. You should have hopefully already gotten it. If not, it should be on the way for 2020. Those payments are going to become due in 2021. The reason it's a cash for business as opposed to a deferral, or in addition to it being a deferral, is when the payment becomes due in 2021, they're going to waive half of it. Okay. Cash for individuals. I'm sure everybody's heard of the CERB. It's just opened up for application this week through my business account. It's available to workers, which is defined. You have to have earned 50 or 5K for the 12-month period leading up to your application or during 2019. They snuck a little treat for most of us private company owners in here who pay themselves dividends. There's a little goodie posted to the FAQ on Monday that said that can now include non-eligible dividends. So that's great news. You must have ceased working for 14 days. So I'll give you an example. If you've got a brokerage and you've taken a client meeting, or you've engaged in some kind of online marketing activity to try and stay in touch with your clients while everything's shut down, I'm sorry, you're not eligible for the CERB as the law is currently written. And so you have to, when you go and apply, you'll have to say, no, I've worked in the last 14 days. And the law says, like, this is wording from the legislation, ceased working involuntarily. And so yesterday, this is where the government is aware of this problem. And yesterday, the PM announced that they're going to be, I think, loosening this a bit. He said they're, if you're moving to a significant slowdown in work, 10 hours a week was mentioned, you might be eligible to get in on the CERB. However, if you've applied for it this week, chances are you were declined. I've had a few people who said, yeah, of course, I always work. I'm an entrepreneur. I'm not being paid, if that's what you're asking. And they were declined. And so we're hoping some loosening is coming for that, in addition to the loosening on the type of income that you could receive. Both of those things are not in the law yet. And so those will have to be changed in the law, which hopefully will come in the next few days. You can't have received any other employment income, EI, allowances, or any other benefits. This is for people who have nothing coming in. And you can apply for 4 weeks periods starting March 15th. And the government says that this will be subject to tax, however, not withholdings. So that means watch out next April. If you are a recipient of $8,000 from this program over the 4 months, that is going to come into income. And if your effective tax rate is, at the worst case, 48%, if your tax rate's of 48%, you're probably okay without the CERB, but let's just say it was, you're going to end up owing upwards of $4,000 next April. So just be careful there. Okay, I mean, obviously for other stuff for individuals, there's EI. So if you have to lay people off, they can choose whether to go on EI or the CERB. When they apply, it's a similar application process. I think it's done even through the same application process. Increase to the child tax benefit. So there's going to be a one-time payout of $300 per child in May, and it's based on 2018 income. So if you have to be below certain income thresholds to be eligible for the CTB. And similar with a one-time GST credit, it's based on income levels from 2018. There will be a one-time payout in May coming. You don't have to apply for either of those; they'll be automatic. There's a property tax freeze for businesses and individuals for the education portion of the provincial education portion of property taxes. Okay, so if you are forced into isolation or you have to care for someone who's in isolation, you can apply for an $1,146 one-time payment from the Alberta government. It's been all over the news for the last couple of days. Those are really hard to get at, but don't rule it out. It could be for you. And so I think that the main requirement there is that you're in isolation. And then, of course, if you're in real dire straits, there's the Alberta Emergency Financial Assistance. They've got a schedule of things that the government will help you out with, such as food, clothing, childcare, transportation, and a lot of other things. All right, so now access to capital. As Pete mentioned, the Bank of Canada dropped their rate. I haven't seen them. My commercial loan hasn't gone down the interest rate yet, so I'm waiting for that, but hopefully it will come soon. The government has announced, I haven't checked this number in the last couple of days, but it was $65 billion in additional support administered through the BDC and EDC. So that is small business loans up to $100,000 through the BDC, working capital loans up to $2 million, and they're guaranteeing government operating credit term loans up to $6.25 million. So getting through to the BDC was tough for the last few weeks. If you're already a BDC client, give your rep a call. It's the way better way to go. Alberta has announced that ATB and some credit union customers will also get access to additional working capital. I don't know if that means that's going to be government-backed or not. But in terms of government-backed loans, if you haven't applied for this today, please hang out on this call for another 10 or 15 minutes while we get through the rest, but go and apply for it. I've heard from many people that the applications for CEBA have opened up through the big four banks, and you can apply at ATB through their contact form, and it puts you in queue to apply for the loan. What do you need for this? You need last year's T4 summary, and it has to have showed that you paid payroll out of your employer company between $50K and $1 million, meaning if you paid $25K of salaries out last year, you're not going to be eligible for this so far. That's another issue that we've raised with the government. It's accessed through the bank that holds your primary account. We have had a company who is with a bank that doesn't do business loans, but they have their account there, so they just had to switch banks, unfortunately. This is a really great loan if you qualify. First of all, there's no interest for a year, and then if you pay it off by the end of the forgiveness term, you're going to get 10% off. So that means you only have to repay $30 of the $40,000. And if you can't be repaid by that,
$10,000 off.
What did I say?
You said 10%.
Sorry, 25%, $10,000 off. You'll only have to repay 30 of the 40. This is a really, really good deal. And not only does it, so in that case, not only does it fit into access for capital, but it also fits into cash because that is a freebie, free interest, free 25%. I've just seen a quarter of our attendees drop off to go and apply for the loan. No, I'm just kidding.
For brokers, so I'll just say for most of the brokers on the call right now, where you're running for mid-sized brokers, particularly, you're going to be right there in the annual payroll that's going to be under $1 million for a lot of the medium-sized brokerages. Look at this as $10,000 of free money from the federal government. All you have to do is borrow it and pay back 30 of it in the next year, and you get to keep 10. This is a great deal. You're a fool if you don't apply.
And so thank you, Pete. You're a fool if you don't apply. This really is one of the government backstops to say, hey, keep paying your payroll for the next 6 weeks until we can get you that money back, right? But you got to make sure that you're qualified. But the qualification metrics are pretty broad. The law hasn't come out on this one, so it's interesting that the banks are accepting applications right now for it. I'm not sure what the terms are, and there's also a question of whether or not that $10,000 will come into income of your company under the debt forgiveness rules. We need to see the law to make that determination. So we've talked about cash, we've talked about access to capital. Now let's talk about some deferrals. So income tax payments that were due between March 18th and August 31st, you don't have to pay till September 1. That includes Part 1 corporate tax, all your installments, and your personal tax. GST are delayed until June, and that's GST taxes, not returns. The GST filing deadlines have not been extended that I'm aware of. Personal tax filing deadline has been extended to June 1st. There's still good advantages to getting your personal tax returns done on time, access to various credits. And if you have a refund pending, we still recommend that you get your personal tax returns done on time. If you want to do them remotely, give us a call. I've been sitting in my basement here hammering out personal tax returns along with the rest of my firm. So we can get them done for you remotely. We've got great online systems to do that. The T3 trust deadline has been extended to May 1st. And by the way, your charity NPO return, if you're involved in that sort of thing, has been extended to December 31st. And so other filing extensions, if you had a T2 deadline between March and May, it's been extended to June 1st. And partnership returns, there will be a few partnership attendees on this call. Your return's now due May 1st if it was due March 31st. Okay, so I think, broadly speaking, call your bank and see if you can defer a mortgage, a loan. There's a lot of tools that the government has put in the bank's toolboxes to allow recapitalization, reamortization, deferrals, up to 6 months of mortgage payments you're going to be able to defer if you give your bank a call. And those 6 months of payments can be amortized through the remaining life of your mortgage. Or you might be able to recapitalize. I think echoing Pete's comments is give your banks a call and see what can be pushed. Utility payments in Alberta you're able to defer for up to 90 days. I don't know if that's going to come with a reckoning at month 4, whether or not you're going to owe 4 months right away. I couldn't find anything on that. So,
and that's still excluding commercial locations, though, is it not?
So small commercial utility payments can go up to 90 days. So check out the government's website to see if you qualify. But residential, farm, and small commercial utility is the wording that's on the government's website. ATB Financial Personal and Business Bank customers can have their mortgages deferred. We talked about that a little bit. And WCB payments are being deferred as well. Some CRA procedural stuff, and then I'll open it up to questions and let you go. They're now accepting electronic signatures for personal taxes, which means if you need your personal taxes done, get a hold of us and we can do it all remotely. The collection center is closed, so if you had an existing payment terms going with the CRA and you call your collection officer, you're not going to get through, which can be very scary because they can just take over your bank account if you miss a payment. But what the CRA collection department has advised on the website is that they'll renegotiate with you and they'll make sure that they don't put you in financial dire straits. But there's a different number you have to phone now, and that's the number. They're not taking any collection actions on new tax debts for the foreseeable future. And if you do have penalties and interest because of something related to COVID-19, that is an acceptable item to ask for taxpayer relief on. There's going to be no post-assessment reviews on GST returns or income tax audits for the next couple of weeks. And most objections are going to be held in abeyance until further notice, including related collection actions, unless you're entitled to a benefit or credit. They've said they're going to keep going on those. So that's it for me. I guess I'll turn it over to Pete to put in some final remarks, and I'll go to the question line here.
And I encourage you to ask your questions. I mean, this is a really unusual and unprecedented time in Alberta's history. We've had downturns before. We've never had a combination of a massive oil collapse as well as an economic collapse as well as a pandemic at the same time. So the kinds of things we're looking at is trying to work out how you're going to have your business survive the next little while and come out of this and adapt into a new world where you can still have a thriving business. And this is the time to start doing it. So if you're feeling overwhelmed, there's help for you. If you need to talk to somebody, talk to somebody that you trust. If you don't know anybody who knows how to talk about what we talked about, our contacts are right up on the phone on the screen. Give us a call, give us an email. Happy to talk to you. We want to get all small businesses and brokerages and realtors through this really, really difficult time and make sure that everybody has every possible trick in the book applied to their business so that you can survive and you can do well. So thank you for making time today. I know this has been a little bit of a fire hose. As I said, this is going to get recorded. You can play it back. You can contact us. You can get the slides. These are resources for you to succeed, and we want you to succeed. So thanks very much for the time. And Clayton, thanks very much for joining on this call today. I've thoroughly enjoyed, and I don't normally say I enjoy having a CA on the call, but today I thoroughly did.
Yeah, no problem. So a couple of questions. One was, do you recommend paying oneself dividends versus salary? I've actually got an awesome 3-part blog that I just typed up in September about that. And all of the advantages of both. I think what we're seeing right now, certainly for access to these government programs, is that the government is favoring in a big way companies who have paid their owners salaries instead of dividends. You've got broader access to help than those who have paid dividends, including the CEWS and the CEBA. Both of those are not available so far to dividend-paying companies. The next question that I have on here is, do you happen to know if the government deferrals for GST and income tax also applies to late payments for previous years filed? No, it doesn't. The announcement is that any income tax and GST that becomes due after March 18th, I believe it is, will be deferred. So any previous balances, no, that's going to continue to tick away and owe money. Now, is there a possibility that some of that interest and penalties can be you can ask for relief under the taxpayer relief program? That's a possibility if your business was affected or impacted by COVID-19. So I hope that answers your question. For commission salespeople to claim under the CERB program, would you say that when the transaction closes, would there be a date of funds deemed to be received by the real estate agent? So far, the wording of it says that you can't have received any other income during the 14-day period, and you can't have worked during the 14-day period. So if your commission check, I would assume that if your commission check hits during that period, you're not going to be eligible for the CERB. Having said that, you're applying in terms. So, the next set of 2 weeks that comes up, you might be eligible to apply for that. I hope that answers your question. The Alberta government for application of the one-time help due to caring for a COVID person. Oh, so somebody had mentioned that the website is closed. And so I asked which site, and they're saying the one where you're getting the $1,146 for caring for someone with COVID. Apparently that website is closed. So maybe that funding is dried up. I'll look on the news to see tonight. Yesterday on the news, people were having real trouble getting at it. So perhaps that program is closed. I'll have to pop on and see. Anybody else have any questions? I'll stick around for a minute or two. Doesn't seem like it. We got a few thank yous coming in. We've still got sort of 75% of our original attendees on thank you. Oh, here's another question. Hey, Clay Pete, I'm a commercial realtor with a small commercial corp, which I run all my commissions through. I expect to be down 50% this year, but I used to be going long stretches of time between paychecks and have very little overhead and expenses. Do you think I would still be a candidate for the BCAP program? So the requirement for that is that you have, so first of all, you need to be a company operating in Canada or employer operating in Canada. So I think you're good there. The second requirement is that you had to have had a $50,000 or greater, up to $1 million T4 in 2019. So if you have that, yes, you're eligible. If you've been paying yourself dividends, no, you're not eligible. I don't know if that answers that question. The 40K loan program has nothing to do with, there's no requirement to be impacted by COVID whatsoever to have eligibility to the CEBA. The only criteria is that you have 50K of salaries to $1 million of salaries on a T4 last year.
As I said, it's a good program.
Yeah, it's a no-brainer. I hope you've applied, Pete.
Oh yeah.
Good. Not accepting applications. So it looks like the 1146 program from the Alberta government is closed. Thank you for updating me on that. I'll get my slides updated after I take a peek at it. I appreciate that very much. I'll hang out for another minute or two in case someone's typing frantically. This one's for Pete. As a strategy, would you recommend meeting all commitments until you are able to, and then applying for all these relief programs once you're out of funds, or?
So there's really two parts to that. One of them is, should you wait to apply for the help? As long as you qualify for it, go for it as soon as possible. It's not, there's a retroactive period to March 31st, but there's a limited window that says that for these programs to be able to apply for and for the qualifications. So first of all, the minute you qualify for these programs, apply for them and don't be shy. Second of all is meeting payment commitments. It's always a good idea to make sure that you've got a good relationship with core suppliers so that when you start to have to go back to business, that you're not on the bottom of their I'm going to help out list. So most of the suppliers that you're going to be working with, people that you count on to do work, they're going to understand that the whole world and not just your business is is being impacted by COVID-19 and the economic downturn. So we're all in the same bucket together. So when you talk to them, my strong advice is don't just not pay them. Give them a call, have a conversation, and come to an agreement of what you can or cannot pay and when you can or cannot pay it, and get that agreement in place with them to maintain that relationship. At the end of the day, maintaining those relationships are going to be so important in about 90 days when we're all starting to go back to work, and we need to get the support of our suppliers and the people that we work with to have a healthy business. So from a strategic point, first, go for the programs as soon as they're available and you qualify. Second of all, on payment of suppliers, make sure that you're having conversations with them. You're not the only one in this boat.
Yeah, I'd agree. If you're eligible for something, get the cash in the door now. Even if you're fortunate enough to get access to this 40 grand and you don't need it, you should apply for it. I mean, this is an awesome loan and it's free money. Yeah, we're all going to pay more in taxes down the road, but if you have access to it, you get it. That's my advice.
Absolutely.
Yeah.
And we don't know how long this issue is going to be and how deep the impacts are going to be. These are uncharted waters in many ways. So take advantage of what's there in front of you now. Just like we just found out today, the 1140 of emergency money, that portal just closed today. People were struggling to get into it yesterday, but they were. So, when the opportunity is there to take advantage of the help that the government is handing out to say, we want to help you through this, take it when you are qualified to get it. Go for it now.
Agreed. Okay. I don't see any new questions coming through, so thank you so much for taking the time and joining today, and I hope that it was helpful. And Pete, thank you so much for helping me out on this and for putting this together with Kreb. And hang in there. And we're all in this together. So
we are, and we're going to make it all out of this together too. So have an awesome weekend. And I don't know about you, but I'm doing a virtual Easter dinner with my family. I'm doing the turkey I'm packaging it up in little aluminum containers, and all my kids are having drive-bys of the house and going back, and we're Zoom calling Easter dinner together. I have a good friend of mine in the Jewish community in Toronto who started Passover Seder last night, and they had 30 people on a Zoom call from Toronto to Pittsburgh to Boston, all family members together on a big Seder dinner that went for 2.5 hours of conversation, and it was really good. So if we can figure out how to do Easter dinner and Passover dinners with Zoom calls and a little bit of technology, so can you. But most importantly, this is the kind of thinking that will get us through this COVID-19 thing and allow us to do business in a whole different way. So enjoy your weekend, have fun, think creatively, enjoy your family in whatever way you can figure it out. And hopefully we'll be able to talk to you in the near future with some more information.
Oh, Pete, we just had a couple more come through. Persons with disabilities, when a family loses income and the working person only has AISH or the CDP available, is there any help there? Just the regular programs that have been announced. Unfortunately, I haven't heard much announced for persons with disability. I wouldn't be surprised if something's coming, but I haven't looked into that specifically. But I have seen, as of this morning, a few people screaming about that exact issue. And then
I can just add to that, the Prime Minister's address this morning specifically called out people looking after kids with disabilities. So I'm going to take that as kind of a foreshadowing that something's coming next week. Let's stay tuned.
Yeah, I mean, this is fluid, right? So, and then generally there's a 6 to 8 week time from when we get commissions are earned and closed and paid. How does that work with the benefits? So a couple different things. One, for the CEWS, if you're looking at a revenue test, you can choose the cash or accrual method to recognize revenues for the purposes of the CEWS. That's the wage subsidy program. So talk to your accountant about which one is going to be best for your business. If you'd like my specific advice, I'm happy to take a look at your business and become your accountant. That would be wonderful. The second,
you're just shameless, Clayton. You really are.
Exactly. The second one to that would be, if you're applying for the CERB and did you earn income during that period, I think it's when the commission check would actually hit to assess your eligibility for the CERB, not when it was actually earned. So, that's what I would suspect. What else do we got in here? And that's it. So I think we'll shut her down now. Thank you so much, guys. And if you have any other questions, feel free to reach out to one of us directly.
Take care, everyone. Bye for now.